Welcome. You're viewing the video version of the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure market breadth summary chart for December 6th, 2015. Market breadth. With this past week's market fractional advance, our bull-bear point and figure ratio, 0.72, fell from 0.96 last week, remaining in bearish territory. The total count of securities in bullish or bearish patterns rose fractionally to 2,889. The count of bearish stocks increased 15%, while the count of stocks in bullish patterns decreased 14%. The Pirls P&F Market Breadth Summary Chart shows us a market now 27 consecutive weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. For a free subscription to the Pirls Stock Market Commentary via email, simply enter your email address in the provided space. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 75 points for the 10th advance in 14 weeks. At a negative 40.63 points, it continues below all 7 tops above plus 100 and continues above all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. Now at a positive 52.56, the CCI 20 daily has decreased from positive 71.51 last week. At Wednesday 11:25 close, the CCI 20 daily formed a zero-line reject long entry point within the plus or minus 50 range. At Thursday 12:03 close, the CCI 20 daily fell below the zero-line reject inflection point, so we exit the trade at Friday 11:24 open for a loss of 71 points on the Nasdaq Composite, or $1.56 per share of QQQ. At Friday 12:04 close, we have a new valid zero-line reject long entry signal for Monday 12:07 open. We will follow the results of this trade simulation in next week's commentary. The CCI 20 weekly is in the second week of a Woody's uptrend. At a positive 79.32, it rose from positive 74.67 last week. The result of our short trade simulation from Friday 11:13 close to Friday 11:27 close was a loss of 205.79 points on the Nasdaq Composite, or $4.87 per share of QQQ. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 industries are negative. Bullish S&P retail, networkers, and semis continue in the top 5. Brokers has entered the top 5. Oil services continues in the bottom 5. Oil has entered the bottom 5. Disk drives has left the bottom 5. Bearish REITs has left the top 5. Gold and silver has left the bottom 5 and leads the top 5. Focus this week from www.theeconomiccollapseblog.com. 27 major global stock markets that have already crashed by double-digit percentages in 2015 by Michael Snyder on December 3rd, 2015. Some key points are the following. Anyone that tries to tell you that a global financial crisis is not happening is not being honest with you. Right now, there are 27 major global stock markets that have declined by double-digit percentages from their peaks earlier this year. And this is truly a global phenomenon. We have seen stock market crashes in Asia, Europe, South America, Africa, and the Middle East. But because U.S. stocks are only down less than 1,000 points from the peak earlier this year, most Americans seem to think that everything is just fine. In the U.S. are now negative for the year except for the NASDAQ. There are 27 major global stock markets that have fallen by more than 10% from peaks that were set earlier this year, listed by percent down for each country in the article. Just because the U.S. stock market crash has not happened quite yet does not mean that a major global financial crisis is not happening. But do you know what is crashing here in this country? Junk bonds. At this point, yields on the riskiest junk bonds have risen to levels that we have not seen since the financial crisis last time around. As I have discussed repeatedly, yields on junk bonds spiked dramatically just before the stock market crash of 2008, and now it is happening again. This is precisely the kind of behavior that we would expect to see if a major U.S. stock market crash was imminent. Personally, I watch the junk bond market very, very closely because it is such a key leading indicator. If you tried to tell someone in China, Brazil, or Saudi Arabia that a financial crisis was not happening, they would simply laugh at you. We need to start learning that the world doesn't revolve around the United States. Those that do not learn from history are doomed to repeat it. None of the problems that caused the crisis the last time around have been fixed. And most of our, quote, leaders, end quote, seem blind to what is happening at this moment, even though the exact same patterns that played out in 2008 are playing out once again right in front of our eyes. Thanks for tuning in for this week's Pirls Stock Market Commentary, featuring the proprietary bull-bear point and figure market breadth summary chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you're looking forward to a productive and prosperous week coming up, and wishing you true success.